Are you feeling caught up in the stock market frenzy with literally everyone you know has begun speaking in the market jargon? This is a position we found ourselves to a few years back. Don't worry, as we have decided to cover some basics in order to get your foot in the door. This video covers the stock market basic topics like what are shares, why are they issued, why are they bought by us, and more. Keep watching. Part 1. What are shares? One could say that shares are the most popular financial instruments available for investments. A share, also known as equity or stock, represents a unit of ownership of a particular company. The total capital of the company is divided into smaller equal units, and each unit is known as a share. The owner of the share will have the right to vote and benefits from the profits of the company and suffers the losses that the company makes. Investors who hold shares of a company are known as shareholders. The influence of a shareholder will have on a vote or his profits or losses will depend on the total numbers of shares held. Take for an example, ABC Limited has a valuation or total market capitalization of rupees 10 lakh. Each share has a value of rupees 100, meaning that there are a total of 10,000 shares. A shareholder owning 1,000 shares will own 10% of the company. His vote will carry the same weight and will be entitled to the same portion of the profits passed on the shareholders as dividends. Let us take another example of stock from the Indian share market. For example, Tata Consultancy Services (TCS) has a total of 375.24 crores of outstanding shares in the market. Out of these shares, 72.05% are held by the promoters, that is the Tata Group, as of March 2021. The remaining shares are held by the public, domestic institutional investors (DII), foreign institutional investors (FII), etc. If you have got 1000 shares of the TCS, then you are approximately 1000 divided by 375.25 crores part of the company. As you own more shares of that company, your ownership in that company will increase and you will be entitled to more benefits like dividends, bonuses, voting rights, etc. However, if the company doesn't perform, you will also be entitled to losses made by the firm as you are also the partial owner of the company. Part 2. How many shares can be issued by a company? There is no upper limit on the number of shares that a company can issue. This depends on the capital a company raises and the denomination it sets. For example, if ABC Limited has issued shares for a face value of rupees 10 and the total valuation of rupees 10 lakhs, then ABC Limited would have a total 1 lakh shares at the same capital. The minimum number of shares, however, will be at least 1. Part 3. How much is a share worth? The face value or the intrinsic value of a share is set at the time when capital is raised by the company. Generally, it can be rupees 2, rupees 5, rupees 10, rupees 100, etc. The value of the total shares held here out of the total capital would show one's ownership within the company. The market value of a share, however, is different. This is the value at which an investor like you and me can buy a share. The market value of a share is dependent on the forces of demand and supply. These factors affect the price of the shares just like commodities. Say the demand exceeds the supply of the shares or availability of shares in the secondary markets, that is stock exchange, then the prices will shoot up. Vice versa, if the demand is less than the supply, then the shares will fall down. Once a company enters the share market, there is a share price associated with all the public companies at which investors and traders can buy and sell its stock. For example, one share of TCS is currently trading at around rupees 3100. You can find the share price of all the public companies at our research portal, that is TradePrains portal. Part 4. Different types of shares. There are basically two types of shares in the market on the basis of ownership. First is preferential shares. These shares are preferential in nature. Investors who hold preferential shares are entitled to receive preferential treatment when it comes to profits of the company or in the event of the company winding up over equity shares. Preferential shareholders, however, do not have any voting rights. Equity shares. In simpler terms, these are the regular shares that are available in the market. They make up most of the shares of the company. Equity shareholders do have voting rights but are paid after the preferential shareholders or in the case of the company winding up. Part 5. Why do companies issue share or go for IPO? The first time when a private company enters the stock market and offers its shares to the public, it is called as initial public offering or IPO. The basic reason why companies issue their shares or go for an IPO is to raise funds or capital. Now, the stock exchange facilitates the exchange of shares for capital. The process involves shares being offered, shares being allotted to investors, and finally the shares being listed on the exchange where they can be bought and sold. By doing so, companies can get access to a wider pool of investors, which include retail, domestic, and foreign institutional investors. Take an example of Tesla. Once Elon Musk sold PayPal, he invested his fortunes in SpaceX, Tesla, and SolarCity. The $70 million which he invested in Tesla wouldn't even get it close to where the company is today. For Tesla to truly grow in order to compete globally, it required lots of funds. This was initially made through venture capitalists, but this too wasn't enough. The company opted for an IPO in 2010, raising $226 million. This could, however, only be possible if Musk was willing to let go of his ownership in the forms of the shares issued. Similarly, in India, there are a lot of private companies like Zomato, Paytm, Flipkart, Patanjali, etc., whose shares are owned only by the promoters currently. If they want to raise big money, they can offer their shares to the public via an IPO and enter the Indian stock market. Part 6. How do people make money from the stock market? The main purpose of investors buying the shares of a company is to make money. In the stock market, investors make money in two ways. First, long-term investing. The initial investment made by an investor in a company has a potential to grow at interest exceeding interest offered by the saving accounts by over multi-folds. Hence, it is always advisable to stay invested in stocks for the long term. Take an example of Bajaj Finance, whose shares were worth Rs 70.36 on 31st December 2010. It is worth over Rs 5,200 today in April 2021. If you would have bought 100 shares of Bajaj Finance in 2010, an initial investment of Rs 7,036, your current investment value would be Rs 5.2 lakhs. Anyways, this investment must be made after careful analysis of the company's fundamentals and if the shares are available at a cheaper price than its actual worth. One of the best examples of the long-term investors holding stocks for many years is Warren Buffett. Warren Buffett's net worth briefly exceeded $100 billion in this year. Companies also rewards those who stay invested through means of dividends, bonus shares, right issues, etc. A portion of the profits of the company is distributed as dividends for each share held. Number 2. Stock trading. Trading basically refers to buying and selling of a shares on a regular basis in the short term to make profits. These traders set strategies to take advantage of both rising and falling markets by buying and selling shares in the short time frame. The profit, however, are infrequent and smaller per trade. Part 7. How to start investing in Indian share market. Now we will discuss the 3-step process for beginners to start investing in share market in India. Step 1. Learn the basics. There are tons of websites on the internet where you can get tutorials for stock market basics and on how to start investing in the share market. For beginners, I'll recommend following TradeBrains blogs where you can learn investing and trading concepts in a simplified way. In addition, there are a few books that are a must-read for beginners in the stock market. They are The Intelligent Investor by Benjamin Graham, One Up on the Wall Street and Beating the Street by Peter Lynch, Common Stocks and Uncommon Profits by Philip Fisher, etc. Do read these books to build up the basics of the stock market investing. Step 2. Set up your brokerage account. Stockbrokers can directly buy and sell stocks in the share market on behalf of their clients and charge a small commission for this service. However, the commission is minimal compared to the fast trading platforms that they offer. Using these platforms, you can buy and sell within minutes using your phone or website while sitting on your home sofa. To invest in the Indian stocks, you will require to open your Demat and trading account, which is offered by various stockbrokers. For beginners, we will recommend using Zerodha, the biggest discount broker in India. Zerodha is the biggest broker in India with over 5 million happy clients and is perfect for traders and investors looking for low brokerage and reliable trading platforms. It offers zero brokerage for delivery equity and direct mutual fund investments. For all other trades, it charges flat Rs 20 per trade. Therefore, you can save a lot of brokerage charges on your trades using Zerodha as a broker. If you want to open your Demat account with Zerodha, there's a link given in the description to go directly on the account opening page of Zerodha. Step 3. Research stocks and start investing. The last step is to research stock and start investing. You can use TradeBrains portal, that is portal.tradebrains.in, to research any publicly listed companies on the Indian Stock Exchange and get its stock codes and financial details. Here you will find the list of over 4,000 Indian companies and pick the one that suits you the best. Before investing in any stock, it is really important that you analyze the fundamentals of the company carefully. Once you have picked the company, log into your brokerage account to buy that share. Closing thoughts. Now that you have understood the stock market basic terms like shares and why they are issued, it is time to keep taking these baby steps as the world of investing is vast. Also check out our article on how to select a stock to invest in Indian stock market for consistent returns. The link is given in the description. Finally, we hope that you have liked this small guide on stock market basics. Let us also know what other stock market topics you would like us to cover in the comment section below. And if you enjoyed the video, please hit the like button and subscribe to our YouTube channel for more interesting stock market related videos. All the best and thank you.